A wealth manager, a financial advisor at a multifamily office last week, how to go about presenting Bitcoin and crypto to some of the clients of the multifamily office, how to start thinking and talking about it. And normally it would be very much like, oh, look at the world economy. There are so many issues going on. There's geopolitical issues, there's inflation issues, there's interest rates, the halving is coming up, all those different parts where you're kind of pushing down the idea of Bitcoin on those particular investors. But why not go with a bottom-up approach? And the bottom-up approach in my mind is, let me look at my client's net worth and income. Let me look at their balance sheet. Let me look at their income statement. If they're a large, multifamily office or a family office, a client with a large amount of wealth, let me look at what they're invested in. Again, let me look at their balance sheet. Let me look at their income statement. And then let's have a real conversation about issues like inflation and interest rates. How does this affect you? How might it affect your portfolio? How might it affect your life? Might it affect your income? And ask questions like, are you seeing higher prices? Are you paying more for stuff? Are you paying more for school? Are you paying more for groceries? Are you paying more for gas? How does this impact you? And then you can have a conversation around what a store of value is. And again, you're going from the bottom up. You're not pushing Bitcoin, but here's what a store of value is. We can talk about gold. We can talk about real estate. We can talk about commodities like oil, or we can talk about Bitcoin. And then you can go into the nuances of why Bitcoin might be better than those other stores of value. But it comes with that head nod. It comes with the idea of, yes, I realize this is a problem in my financial life, in my portfolio, or in my income, or a combination of the two. I realize this is a problem. There are solutions for it. Bitcoin is one of those solutions, and here's why I might choose that as the solution for this particular problem. The same might be said if we move over to ETH. Obviously not the same use cases, but if you go, look, I would like some growth in my portfolio, and growth to this point has been very tech-heavy kind of assets, but what if there's a time in the near future where tech doesn't grow like it has? Well, there's this other application, this other platform called Ethereum, which is in my mind very much like Microsoft was at one point, or very much like Amazon was. And you can have the same head nodding arguments, which says, do you think there will be more growth in the future? We can look at stable coins and the growth there. We can look at tokenized funds like BlackRock is doing on the Ethereum blockchain and go, do we think there'll be more usage? You have to have this asset called ETH in order to be able to make those transactions go. And by the way, every time there's a transaction on Ethereum, the amount of ETH burned usually eclipses the amount that's created. So basically with every transaction, there's a little bit less ETH in the world. Do we think that's a viable case for the price of ETH to go up? And if so, then that can fit in the growth sleeve. So you don't necessarily have to have this 1 to 5% crypto allocation and then allocate to Bitcoin, ETH, and everything else within that. It can be solving the problem now. Bitcoin can solve a problem and is not nearly as speculative, and I would argue it's not speculative at all anymore as it used to be. It's no longer a speculative, I'm trying to turn my dollar into 100. It's, I'm trying to protect my dollars and their purchasing power, and I'm trying to protect my investments that I currently have in their purchasing power, and that's where Bitcoin solves the problem. I want growth in my portfolio, but because so many other assets, so many other investments I can make, like tech stocks, are so based on everything else that happens in the US economy, then I might want to take I say a flyer, but I might want to invest in this thing called ETH, because if I think that network is going to grow faster than Microsoft and Amazon and all these other networks, so I think Ethereum is going to grow, then I might want to have ETH, the crypto asset. And then if you go down the road to other crypto assets, if you go to Solana and Avalanche, or if you go to something like Chainlink or Maple or something, then you're making the case for, do we think, just a fundamental case, do we think there will be a use case? Do we think more people will start utilizing this platform? And therefore, what is the token for? What does the token do? Is it utility? Is it governments? Does it participate in profits? And then what is the token issuance? And go down there just like you would do any other sort of kind of VC style investment. You can make the case and then make the case for the token. And then, by the way, with all these Bitcoin, ETH, any other tokens, they're highly liquid. So now you're not making an illiquid investment. It's a very liquid investment. So this was a conversation that I got to have with someone, and I don't want to pretend that I'm the only one who came up with this. There are a bunch of us in the room that came up with this, but this is a real conversation with an advisor who's looking to, move some client assets into crypto, and what is the argument to make? And again, instead of making this top down, the world is falling kind of argument, let's do a bottoms up, talk to the clients or look at their portfolio or look at their income and go, how can we utilize opportunity to invest in crypto to solve some of the problems that you have in your financial life?